All right, we've had a lot of Fed speak already today. We have more, don't we, Steve Liesman?
Yeah, Jim Bullard, talking to the Financial Times, is saying that he's inclined to back another rate hike. He says he has an open mind for that June meeting, but he'd like to take out some insurance against higher inflation. And Scott, this happens after Lori Logan, the Dallas Fed president, perhaps known as somewhat less of a hawk than Jim Bullard, saying that the data do not validate a June pause. She says we're not there yet when it comes to a pause. And it comes after Phil Jefferson this morning in the 9 a.m. hour gave a speech where he was kind of in the middle, kind of said, you know, inflation is too high. And what's happening, Scott, I think is important, is all these Fed officials seem to be downplaying the banking stress. You remember the banking stress was the thing that was the concept that it would cause the economy to slow much further, cause inflation to slow further. And now we're just hearing less concern about that at this point, and that brings the focus back to inflation, brings the focus back to raising rates. And I will tell you, I just want to give you a fresh quote on this. The probability of a June rate hike is now 30%. It was up from 20% this morning. Still an odds-on bet in the market for a hold at 70%, but inching up, and we're hearing several Fed officials, including Fed Governor Bowman last Friday, also hinted that she would be inclined to raise rates. So I just don't think we can go into this June meeting at this point with still plenty of data to go. I don't think we can go into this June meeting, Scott, thinking that it's an all clear on a pause.
Oh, no, obviously not. You know, the question, Steve, is whether the market is taking the Fed seriously enough. That's one question. And the other is whether the Fed is taking what's happening maybe underneath the surface, or at least the fears of what might happen, seriously enough in its own right, in terms of commercial real estate, what still might be to come as it relates to the regional banks that they're so willing to apparently declare all clear.
Yeah, and Scott, I have to report, I did talk to some bankers last night at an event, and they did not seem overly concerned with what was going on, at least on their books. They feel like they have the deposit flows under control. They know they have to pay more. They know these are going to be difficult times to get through. They would like some tweaks and help from the Fed in a variety of ways. They were not happy about the idea of the Fed raising rates once again. But the idea being that you did not get a sense last night of a crisis, and I'm not hearing that again in the in what Fed officials are saying as well. So they seem to feel like the worst is behind them. There could yet be additional bank failures, but as you have been talking about, those regional bank stocks have been up the last couple days, and that's been something that's created a little bit of confidence there. So they're going to turn their attention towards inflation unless they have a reason not to. And that credit issue you mentioned, it's still down the road, but I don't think it's going to stop the Fed preemptively from doing what they think they need to do when it comes to fighting inflation.
Okay. Steve, good stuff. Thank you very much for bringing us those headlines from Jim Bullard. That's Steve Liesman, our senior economics reporter.